I will just read this introduction here and get things rolling here. And then we've got some current news to get into. First, Bob is the founder and president of Trade Genius Academy. Before that, Bob was an executive for two Fortune 500 companies in the financial services industry for 25 years. He focused on business development and mergers and acquisitions. Bob has been trading since 1991. And in 2008, Bob started his first trading service with his private group of friends. He became so popular, he decided to take it public and turn it into a business. Entered Trade Genius 2015. Bob's strength, he is able to see around the corners and position his trades into the right markets and sectors. For the past 5 years, he's been able to track a 65% overall win record in the market. Bob, hi, good to see you. And how have you been?
Oh, I've been good. I've been good. Thanks for the intro. I guess we should probably talk about the Fed meeting since it just transpired.
The Fed pause, that's exactly where I was going to start. So our minds are in the same spot. So what is this on again, off again, tightening, not tightening? The Fed's supposed to be data dependent, but yet we see this pause and they're talking about, okay, we might have a couple more hikes coming later this year, but inflation isn't down to the 2% target. So what is going on with all this?
Yeah, so they didn't call it a pause; they called it a skip. And yeah, so our view is that I think we're stuck in a 5% inflation range. With the government going to spend an additional $4 trillion of deficit over the next 2 years, essentially 10% money supply increase. So unless the banks are going to implode in terms of their debt that they have on their books, and or the Fed is going to unwind their entire balance sheet, we're looking at 5% being pretty sticky here. And so, the reason why they paused though at this point is that the banks can't absorb any more short-term rate increases because, as we're talking today, I bank with US Bank. You're familiar with them. And so I went ahead on my brokerage account and I just went ahead and bought a 90-day treasury bill for 5.31%. I got an email alert here that US Bank sent me a note here while we were talking about the Fed, said they're going to offer me a 4.95% CD for 19 months. And I'm sitting there saying, okay, where am I going to put my deposit money? Am I going to keep it in the bank, or am I going to put it in the treasury bills? Remember, you only need $1,000 to go into a treasury bill, and they have $1,000 minimum for the bank. So what my point here is that the banks still are not paying enough money to stop the vomiting of excess cash out of the banks. And at the same time, we're going into a recession where the loan books that they have on are actually below their average yield on these loan books are below what they're paying out on CDs. So if he raised again up to the terminal rate, I think of 5.62%, that's even more pressure on the banks. And so they had to pause at that point and wait to see when all these loans that are coming and maturing are going to get higher refinance rates where the banks will become more liquid, and also see who's going to default on those loans. So that's the pause. They can't raise rates anymore. Okay. I mean, they're going to probably try to squeeze out one more, maybe July, and they have to be done. So either they're going to accept higher inflation, which has its own set of issues, or they're going to have to drive down the money supply in another way, shape, or form, either through Congress, which is not going to happen, or through the banking system by basically saying no more loans for you. And those are the only options that are left.
Okay, so what you just broke down there, that makes perfect sense. So this whole 2% inflation target, is that just a talking point? Like, why is that even there then if we have all these other factors? Yeah.
That's all it is. They're toking. The 2% number is a joke in and of itself because that's basically depreciating years of my wealth. It's being taken from people and given to the banks. The inflation rate that they should be working on is 0% inflation rate.
Yes.
But they'll never do that because banks want that VIG in there. They want that collateral to constantly be sliding up 2% every year. So when they take it from you, they have something they could sell. And so yeah, this deflation that's coming is not what they want. So they're gonna opt to keep the inflation higher. They may not. Here's the problem: we may get deflation, but it won't feel like deflation to you and me because prices are going to still rise. It's just that, the headline number is collateral and money supply are going to collapse. See, inflation to me nothing to do with prices, everything to do with money supply and velocity. So you can have collapsing money supply, collapsing velocity, but you can have higher prices. It just means that you can't afford it. And I think that's where we're heading. We're heading in the worst possible position we can be in. And people in the 70s called that stagflation, but they don't really understand what that means. Really, it's an inflationary depression, meaning that you have an inability to afford the things that you want or need, but at the same time, prices don't look like they're coming down. You just can't afford them. Your ability to pay for them is coming down.
Yes. Yes. So there's that. And then there's also the production and the supply and demand side of things here with manufacturing. And here we are now, 3 years beyond the onset of the health crisis there in 2020. And people thought prices were going to get back to normal with homes. What's the definition of normal, but also automobiles. What's going on with that? Are we still seeing supply chain issues?
Yeah. I mean, look, the issue is, with homes, they're not going to change because the average, duration on a loan, I think is 4% or something like that. And new loans are coming in at 7%. So people are only going to sell their home and move if they have to. Okay. And that would be forced to job change, job loss, retirement, that kind of stuff. Other than that, you're not going to see prices don't fall on their own. They'll have to be forced down. Autos is a different animal. Interesting. I think at some point auto prices are going to collapse because they're not going to be able to sell them. Nobody can afford the notes, and we have people leaving the auto markets or auto financing markets in droves. So either the companies themselves are going to have to self-finance these things, or you're going to see prices crumble. Tesla has been the only one that's been aggressively reducing prices. They have. You get probably a Tesla EV with all the if you qualify down to $19,000. So there are certain places where you can get a cheap car. If you want to watch the car market, you watch the used car market. That tells you everything. And at some point, there's going to be a massive amount of inventory coming because people are defaulting on their car loans.
Yes.
It's become a big issue.
Right. And I was expecting a lot bigger of a decline in the availability of credit and people getting approved for loans. I just read a report, though. I think it was Manheim or Cox Automotive, one of those. And they said the approval rate's only down 2.4% year over year, which a lot of people were surprised when this whole banking crisis started unfolding in March and the higher interest rates. People expected a really collapsing prices for cars, amongst other things.
Yeah, it's going to keep falling, So it's really the velocity of the move you got to watch, but yeah, we see credit conditions tightening. Reports that are just continuing to tighten. But remember, they're approving the loans. You just don't know what interest rates they're approving it.
Right.
So you're going to get to the point. Right now, you can't raise interest rates on credit cards anymore. They're averaging 21%. So you're going to see a massive default in that area. And people at some point they can't afford $1,000 a month car payment. So it's going to be an issue. But if you have good credit, you can get credit. If you don't have good credit, you're not getting it. It's becoming more discerning.
Yes. And you talked about we talked about real estate. We tied a few things together right there. But credit card debt continues to increase. But the last report that I saw for the quarterly numbers, the rate of increase is starting to slow. And obviously, I think that's because people are getting closer or have hit their credit limit. Will there be a point when the banks really start cutting credit lines at the point where defaults start? How do you see that playing out, where defaults start increasing drastically?
Yeah, they won't cut credit lines and credit cards as long as they think they can extract collateral from you. They're going to keep jamming you in the credit card. So in aggregate, they probably still feel pretty good because home prices are staying relatively stable, even though home sales are collapsing. So if you start seeing home sales come off, then you'll see credit card lines being pulled. But mostly they'll start pulling home equity lines and stuff like that, personal loan lines. That's where you're gonna. That's when you know the stress really hits. If you have a home equity line that's open but you're not fully used, and they pull it from you, then you know the shit's hitting the fan.
Absolutely. Okay, so we're going to get into your trading platform here and your services that you offer, and kind of a segue into that is a stock that a viewer of mine said, "Thank you for letting me know." I talked about Carvana when it crashed all the way down below $4 from, and actually, let me just bring it up here to see what the peak of that stock was. Wow, this thing hit almost $350 in mid 2021. It got down below $4. So a viewer of mine said he bought it right around $4 to $5. I picked it up at like $6, and now it's went up to like 14. So it was more than 100% gain, which is nice. That was kind of a long-term thing. You bought it and had to wait a couple months. So that was a nice, what's called a swing trade, right?
That's exactly right. When you hold something more than a couple of weeks, it's a swing trade.
Okay. Now, do you see any other opportunities where you can just buy something like that? Maybe right now, maybe something that's on the horizon where you can kind of sit and hold it instead of being an active trader every day for the people that aren't at the computers every day?
Yeah, I mean, one that I like and is starting to move higher is a company called BTU, which is Peabody Energy's coal company. They drove that price down pretty far. It's now like $3 from its lows, but they paid off all their debt and now pay a dividend. And they're mentioning they're going to buy back shares. So I'm looking for that move back up to about $28. It's a good one. One trade that we've been in that's for a long time that's been really working for us is just pulling back now is the uranium stock is CCJ. It may pull back to the high 20s, and then we see that in a year from now, a year or two now, $58 to $64. So there's a deficit in uranium in the marketplace, and it's starting to get reflected now in these stocks. And then one that's a little bit more of a longer term play, but it's called Innovix, which is a battery technology company out of Malaysia, trades on the U.S. market, but they dope their lithium with silicon, which keeps the propensity for a fire with lithium down. And they've been doubling their production every quarter. So we're looking for an opportunity there. I own that stock as well. And there's a potential for it going from the high 13s where it is now to the low 20s here, probably in the next 3 or 4 months. So those are some ideas that I've been sharing with our folks. And then we're in and out of a lot of trades in a couple days. So we mostly short swing. I'll tell people if I'm in something long term or if it's in my IRA, like CCJ is long term, and then BTU is something I want to hold here for a couple months, and the Novix the same thing, and but CCJ is one. It's a secular hold. Hold until the end of the uranium cycle. Okay. But overall, I'm pretty bearish on the markets.
Gotcha. Yeah. So I'm glad to hear that because I've gotten a couple messages saying, JJ, I don't have time to trade. And I think when people hear trading, they think of day trading, and you have a lot of these gurus out there, saying, okay, buy this stock and 2 minutes later sell it, when it spikes up. And the people that lead those chat rooms are actually moving the stock because they have a lot of money. And then all these other people are just following behind them. So it's not that necessarily with you. You can take your time. You don't have to be on the computer every day at market open. So you can have a few days to kind of hold the stock and things like that, right?
Yeah, even better. We just send notifications out on any trades that we think are hitting our criteria. So you just you get a Discord account with us, and then you turn around and you put notification on there, so you'll actually get our information. And then we have, depending what room you join, we have an algo that'll also tell you, hey, these stocks are looking interesting. It doesn't mean we curated it. It just means that it's hitting a criteria, something for you to kind of root around to see if you like it. And yeah, you don't have to day trade with us. Most people don't. Most people don't have enough money to day trade anyway. under 25K, you can't really day trade. So, so unless you have a cash account, I don't want to get in all the details, but so we think the best way to make money is to, low and steady, get rich slow, we call it. And so, if you can start banging out, on average, a couple $100 a day, next thing you know, you're up 40 grand for the year, so you don't really need to. If you have a small account, if you can start making $50 to $100 a day over time, that's $1,000, $2,000 a month. That stuff adds up, and you can easily do that. The way our system works is and I hate because it's so trite. It's a buy low, sell high, but it's basically within the channel. And so we look at channels, we look at momentum, we look at the angle, and so we have our algorithms informing us that stocks are hitting these criteria and these have good setups. And so, if you buy a stock, if you can make 1% a week in a stock, that's 50% a year, and let's say, you dedicate, 30% of your portfolio to trading, the rest is in cash, you're still making 17% a year. You see what I'm saying? So you don't have to go crazy swinging for the fences to make money over time. And that's the hardest thing for people because people are impatient.
Yeah.
They want to day trade, but day trading usually get a baseball bat upside your head. And, for us, hey, look, if I can get you 1%, 1.5% on average net of losses, over time, you're going to make a lot of money. And that's what our system does. 65%, I'll look at it right now. As of today, our win rate as of today with over 949 trades, we're 66.39% win rate. And then the average net, this is net of gains and losses, Jeremiah, is 0.83%, which gives you an annualized of 85.86% if you're fully invested in the trades.
Wow.
So usually not. So I usually say take a third of that. So, so you're 30-some%, because you have slippage and stuff like that. You don't always get to, you don't always become 100% invested, so that's what we do. And over and over and over again. In fact, if I look here real quick here of our last, 10 trades, the only trade that we lost on was a hedge for NVIDIA. You can actually short NVIDIA, NVDS, but, we bought it at $9.63. We had to stop at $9. So at some point, the NVIDIA short trade is going to pay off handsomely. So we'll re-enter that trade again. But like I said, the last, and we have, 5 open trades right now, and we have 2 losses over the last 20 trades. So
Nice.
Not too bad.
Not too bad at all. Really good.
We keep it simple. We teach you how to trade. We give you the access to our indicators so you can find stuff on your own. We have chat rooms. We just finished right now. The reason why I was a couple of minutes late getting on the Zoom is that we had our whole entire customer base listening in on us as we talk through what the Fed was doing and how price was reacting to it. So we like to educate people, and people have access to us. And for what we charge for the service is nothing. And we have nice specials running till Saturday, 65% off anything bundled. We trade stock, we trade crypto, we trade options, futures. So you have a choice, or you can use promo code Father's Day and look for something that's not bundled, and then you can get 40% off on the retail price. And we have annual memberships, and if you're nervous about putting that kind of money out, which is a couple $100, which is not a lot, you can actually opt for a monthly and put a promo code on it, and you'll spend more money at Starbucks than you will with us.
Absolutely.
And I'll make you more money than coffee will.
Absolutely. Yeah, we'll have the links down in the description of the video. Now, last interview that we did, you talked about somebody that made their money back in just a few days. Are you still seeing things like that happening with traders?
Yeah, not so much now. The last month or two, you're happy if you can eke out 1% gains, because even the market's going up. If you notice, it's kind of just drifting up, every day, and half the stocks are falling. So the breadth, not the breadth, but the breadth of the market is 2/3 of the stocks are falling, only 1/3 are rising. So even if you get a good trade, you're only getting it for a day or 2 days, and it falls back. So we just been in the non-greedy camp. Hey, we make 1%, 2%. Let's stick a stop underneath it, or let's get out of the trade. And that's kind of how we've been operating on that. But yeah, for the most part, people are making money. The only people who are losing money and where I'm losing money is anything I'm hedging now, because I'm expecting a turn in the market.
Right.
So, overall, I'm net long, but I do have hedges on, and a couple of hedges today actually performed, even though the market actually was flat today. The Fed meeting was flat.
Yeah.
Usually get a bigger move on Fed day. So we're going to have to see what tomorrow brings, because tomorrow usually is usually the real reaction to the Fed move. So we'll see what tomorrow brings on that. But here's the deal. Either we're going to roll over hard, and if we don't roll over hard, then, commodities and energy are going to do well. And I think you'll see a rotation out of tech and into commodities, because they're going to say, hey, we're more worried about inflation. And those companies don't like inflation because they have to then finance at higher levels. So eventually you'll see a rotation. That happens a lot. And so that's kind of where we are with that. We really don't care from a macro standpoint. I'm super, super bearish. Economy is going into recession. You can see it all around you, but the stock market sometimes can linger and ignore that.
Right.
But then it will follow them. It will follow the economy.
Okay. And you say that you're hedging, and so you're expecting a turning point. Sounds like very soon this year. Is there going to be something that's going to trigger that, or is it just going to be the continual kind of slow decline that we've been seeing, even though the markets have been up, but a lot of other economic indicators, are down?
Yeah, the way the markets work is they go up on an escalator and they come down on an elevator. So the market's not going to come down gently. If it comes down, it's going to come down pretty hard and fast. And the things we're hedging is in the tech area, because that's what has risen the most. So there's a stock ETF out there called SARK, which is Kathy Wood's art company. They short that opposite. And then there's a kind of derivative kind of a stock called NVDS, which is 1.25 short of NVIDIA. And NVIDIA right now is trading at 35 times sales, which is, if I was an M&A officer for a corporation and I brought that to the board of directors and I'm buying a 35 price to sale company, I would be fired before the next sentence came out of my mouth. So you'll never get your money back putting that money into NVIDIA. And so we see that as a potential massive, what they call it, Eiffel Tower bait. You went up one side of the tower, now you're going to come down the other side. And NVIDIA has done this in the past. So 2 other times they've risen, 2, 3, 400% and given it all back. So we see this as no different. So those are hedges, and I'm still in both those hedges. So both those hedges are underwater, but they're long-term hedges to protect my long portfolio that I have for my IRA. And I recommend those hedges to people listening to us, because when they become right, they become really, really, really right.
Nice.
And at this point, either you need to be generating cash, put your money in T-bills, or you need to have a hedge, or you're gonna find yourself in big trouble. And then next month when we talk, I'll give you guys another hedge. I'm just gonna wait to see how it plays out, but it's a really good one. So when you go into recession, it has returned 50% in the past, and I expect no difference this time.
Awesome. Yeah, sounds like an excellent setup that you have with the algos, and I'm sure it's probably programmed to look at moving averages and Fibonacci lines and things like that, right?
Yeah, actually, we look at momentum and levels and angles. So, look, there's only 2 things that move the market: price and volume. But how it moves will determine what it does. So, a lot of times in the markets, there's a line called the center line of price. And then when it deviates from that price, it's just like a radio wave or sine wave. If you get too far away from that center line action, algorithms will push it back towards the center line. So we have algos that look at that. Then we look back and say, well, what was the angle of that center line? Is it trending down? Is it trending up? So that informs us of information. And then as price moves, is there more volume coming in on the upside versus the downside? And that usually informs you too, because if you have somebody selling, but it's just very low volume, it's more of a consolidation. But if you have somebody selling with a lot of volume, it's a capitulation. So those are the things that we test for and we calculate for, and then we let our algo inform us that, hey, these are stocks hitting these criteria.
Okay.
It works really well. I've been doing the same thing for a long time. The hit rate has been pretty consistently in the 60s since I started measuring it. So I'm comfortable with the algo.
A lot more sophisticated than what I do for my trading. I just see a stock that's beat down like Carvana from over 300 down to less than $5. And I guess some would refer to that as a bottom fishing. So throw a few $1,000s into it, see what happens. I figured once it got that low, it couldn't go much lower unless the company went under. So that was still kind of a risk. But yeah, I'm going to have to get more detailed into trades and, take a look at some of your products actually.
Yeah. So, a lot of people will do that too. My brother-in-law, I did it with him yesterday. He said, hey, I bought Budweiser after it collapsed because of the Budweiser thing. But, he said, yeah, by the time I got in, got out, paid commission, this and everything, I made a couple bucks. So, there's times for that, especially if you see, a big move down on big volume. We actually have an algo that we call the sniper that would tell us this move was too far, too fast. And you can actually take that trade and take it the other way. So we just did, that's what BTU, we had a daily sniper on it, say too far, too fast. Okay. So we jumped in on it. So yeah, so we have algos for that too. It's just that I don't like Carvana.
Yeah, it's an interesting concept, right? The vending machine, but people are paying for convenience where they get the car delivered, and I like to be able to kick the tires, test drive it. But speaking of what you just said there, big drops very quickly. Target is Target a dip buy, or what's going on with that? We know what happened with Target.
Let me look while we're on. I'll let you know. Give me 1 sec.
All right.
It's TGT, correct?
I think so.
Yeah. It's scary when you know all these symbols.
Yeah.
Right now, that's the 1 minute chart. That wouldn't help us at all. So Target just pushed down. Yeah. I'm actually getting 2 buy signals on it short term, but, and I got one of the snipers that you just referred to. So, the only issue with Target is that unless you can play those with options, $133 stock is probably a little too rich for most people's blood.
Yes.
So, if you go from 133 to 140, that's $7, but it's only like a 1% move. You know what I'm saying?
Yeah.
So, but yeah, so that's exactly what I was referring to there. So it went out of the range, and you can actually with these, depending if you buy these, some of these indicators come part of the package. Some you can just buy separately. And you can then set up in TradingView. You can just set up alerts for them and just trade these alerts all day long. Sniper Bio was the very, very first algorithm that Phil and I built when we were trading futures 10 years ago. So it's a really reliable signal.
So you've built the algorithms. Wow. Okay.
What's that?
So you've built the algorithms yourself.
Oh yeah, these are all ours.
Completely customized. Okay, awesome.
Yeah. Yep, these are ours. And what's cool about that is that markets like the V make a V shape, they V down, they V up, where when you're trying to short the market, it's more like a U. It's a little bit more of a process. So we love sniper buys. We're interested in sniper sells, but we love sniper buys. But if we get a sniper sell, if we're long, we'll close. But if you get a sniper buy, then you're like, hey, this is where you take your shot and put a stop underneath it.
Gotcha. Yeah. And I tell my viewers all the time, okay, we can look at the news, we can talk about what's happening, but if we're not benefiting from it, if we're not trading and profiting from, the angles that you bring up here and just in general, knowing what's happening, what good is it? And Target, even if you disagree, with what they did, you can still take advantage of these price moves. That's the way I try to put it out there.
I'm just taking it away from another trader. So, when let's say add money or take money out, buy shares, sell shares, is that you're not hurting the company at all. You're really hurting another trader,
right?
Because zero-sum game. So yeah, I'm not above that. There's some stocks I just won't trade. Like I hate Meta. So for whatever reason, so I don't trade it.
Yeah, I hear you there. Got to have some standing there with some things that are going on out there. So I'll have the
Yeah.
links to your programs down in description.
Yeah, go to tradelikeagenius.com, and the next 2 months should be pretty wild in the markets, and we could talk about those as they unfold. Jeremiah, thanks for having me.
Thanks for being back here, and we'll hopefully have you on again. Okay.
Yes, sir.
All right.
See you later.
Okay. Well, hope you have a good rest of the day. We'll see you very soon. Okay.